Whether you see Swiss equities as particularly attractive in terms of defensiveness, given the conversation we were having earlier about how you'd be getting more defensive in US equities.
Yes, I think certainly the Swiss market has always been one which doesn't really represent any particular economy. It tends to represent a quite attractive cross section of global companies. So there are some large healthcare firms there, there's some large financials there, for example. And certainly the Swiss healthcare stocks have been something which we have been positive on, and they are represented in our portfolio, for example. And clearly there have been some very strong performance track records within the HPC space and the food space in Switzerland. So I think as a market, it's certainly one which global investors will want access to. I think that's something that the European authorities may have to think about.
Paul, I want to ask you about the equity markets and what happens after an inversion in the yield curve. This is something Anne-Marie's been talking about today. She's saying, you know, beware the re-steepening, because it's not the inversion that causes markets to tumble. It's when the steepening comes back on. What do you think about that? It's typically, I think, a 2 to 18 month lag until we see highs. So shouldn't investors stay in markets until they feel they're topped?
Well, I think the big question right now is, you know, since the financial crisis, is that the bad news equals good news has been the mantra for equity markets. And so, you know, lower rates have been a signal for equity investors to get more bullish. I think the fact that we now have, or have just seen briefly, a yield curve inversion is a significant event from the perspective that it may well be this time that, you know, bad could equal bad. And certainly we've had a long cycle, and certainly we started to see some economic indicators become a lot more mixed. So from that perspective, you know, I was saying a little bit earlier to Nejra, I think that perhaps the opportunity to sell spikes might be more attractive now than the opportunity to buy dips. We have seen some reasonable results come through from some corporates over the last couple of days, but that's always going to happen. The mood music as a whole does seem to be changing a little bit, and that's something which I think will lead to high volatility over the next weeks and months.
Yeah, that was a really interesting comment, sell the spikes rather than buy the dips. If you're looking at European equities then, I mean, we were having a conversation in the last hour about the challenges facing German corporates, for example, and especially as this week we've seen that contraction for the second quarter in Germany, questions over whether we'll get a recession. How exposed are you to German equities?
We've reduced our exposure to the German industrial sector, and that's one which really is a bellwether for the German economy. The so-called Mittelstand, the sort of mid-range companies, are a real temperature gauge for the German economy, and they have been struggling. And that's really a direct or perhaps slightly indirect consequence of the trade war situation, and I think that will be of great concern to investors, and that's why the Bund has been driven down so low, at least in part. So I think from the perspective of wanting economic exposure to the German domestic economy, that's something which we wouldn't be too concerned at this stage.
Are there pockets, are there industry groups that you like here, Paul? And I wonder what you think also about any value plays. It's been a loser, obviously, but is there a place where you see value and you want to buy it?
I think certainly what we saw a few weeks ago was an attempt by the market before this latest downdraft at becoming a little bit more constructive around the value sectors, and we saw a brief flurry in semiconductors, for example. Auto parts did a bit better for a period of time, but looking back now, that did look like a bit of a blip in a downward trend. I think a really important aspect of that actually is that the traditional divide between growth and value sectors has been exacerbated, in our view, by the differences in ESG credentials, and it seems that quite a few of the value sectors don't really stack up that well in terms of ESG, and that's become an important consideration for many equity investors, and that's something which I would be watching on an ongoing basis. I think there will be opportunities in some spaces. We'll get situations, for example, where certain handset manufacturers will have unexpectedly good results, and that will put a bit of a light under the semi-sector from here and there, but one may have to be quite fleet-footed as regards trading in some of those areas.